And let us look at the role of high dividend yield stock, in a balanced investment strategy. How do you include high dividend yield stocks in your portfolio to balance your investment strategy? You have to have a balance to give you a balanced portfolio. So in this case, I discovered that high dividend yield stocks will guarantee income generation. There's that income generation, number one. So high dividend yield stocks provides a steady stream of income, which can be particularly valuable for income-seeking investors, such as retirees or those looking for regular cash flow. As we age, as we move towards retirement, eventually we become so conscious of income stream, regular income stream coming in, and that would necessitate including incorporating high dividend yield stocks in our portfolio. This predictable income can complement other sources of returns in a balanced portfolio. So as other parts of the portfolios are bringing in income, dividend yield also is equally high. Dividend yield stocks, are equally bringing in, steady stream of income. Number two is lower volatility. High dividend yield stocks tend to lower volatility in a portfolio. So high dividend yield stocks, often found in stable, mature companies, tend to experience less volatility than growth stocks. They are not as volatile as growth stocks. So the consistent dividend payment provides a buffer during market downturns, making these stocks an attractive option for risk-averse investors. Your risk tolerance is kind of moderate or low. You need to incorporate dividend stocks into your portfolio, that in case of a downturn you will still have something to fall back on. Number three is compounding returns. High dividend yield stocks tend to compound overall returns. So when dividends are reinvested, they contribute to compound growth over time. There's this dividend reinvestment plan. So once you incorporate that plan into your portfolio, you discover that it will compound the overall growth of the portfolio over time. And so by reinvesting dividends into more shares of the same or similar stocks, investors can benefit from the cumulative effects, which boost long-term portfolio performance. Number four is diversification. So including high dividend yield stocks in a portfolio adds to diversification, especially in sectors such as utilities and consumer staples and real estate. And these sectors tend to be less volatile and have steady cash flow, which balances out the risk associated with more cyclical or growth-oriented sectors. So when you incorporate it into your portfolio, it gives you a decent level of diversification. It helps to give you a balanced portfolio that will not tend to fluctuate too much or be, more volatile than necessary. And it provides stability, particularly during economic downturn. And not only that, it provides, attractive returns, usually. So number five is defensive positions. So high dividend yield stocks often belong to industries that are less sensitive to economic cycles, such as healthcare, telecommunication, or energy. So usually healthcare, telecom stocks don't really correlate so much with the economy. When the economy is down, or people will still visit the hospitals, people will still need to communicate, people will still use energy. So this kind of stocks actually, make it it makes your portfolio more balanced, and it provides, better returns. It incorporates safety and provides defense against negative economic impacts. Please like this video and subscribe to this channel if you have not done that. It doesn't really cost anything to subscribe. Just click the subscribe button, that is all. And you could give me a thumbs up so I can be encouraged the more to keep on bringing contents of this nature to you. All right. I'm just like trying to distill, to distill about 18 years, investing experience into, these videos. Please encourage me by subscribing to this channel so you can get to really understand the experience I've gotten so far and the knowledge one had been able to accumulate over a period of 18 years. All right, so don't forget to subscribe. Number 6 is risk mitigation. Risk mitigation. Dividend-paying stocks typically reflect companies with established business models and financial discipline. So the focus on paying regular dividends may signal a lower level of risk, as these companies tend to have strong cash flow and efficient management practices, which can help mitigate the risk in a balanced portfolio. So you incorporate, you want to achieve balance in your portfolio. You should incorporate high dividend yield stocks. Number 7 is growth potential with income. Growth potential with income. While high dividends, yield stocks may not have the same growth potential as more speculative growth stocks, they often offer a blend of income and moderate capital appreciation. They may not really grow as high as a stock that has that has a predominant share of growth stocks, but at least it can provide income and can also provide moderate or decent capital appreciation. So this balance makes them appealing for investors seeking seeking a mix of stability and income and some level of growth without taking excessive risk. Number 8, hedge against inflation. You want to hedge against inflation. You don't want inflation to impact your portfolio, unnecessarily. So you may need to incorporate, high dividend yield stocks. So dividend income can help hedge against inflation, as companies that consistently raise their dividends tend to have strong financial positions, as well as some strong financial performance. So regular dividends increases help offset the erosion of purchasing power caused by inflation, providing more reliable income over time. You generally, inflation do eat into investors' buying power or purchasing power. So to be able to have an income that will outpace, inflation, you will need to go in for high dividend yield stocks. Number 9 is complements, to other asset classes. Complements to other asset classes. It can serve as a complement, as an addition to other asset classes. So in a balanced investment strategy, high dividend yield stocks complement other asset classes like bonds, like real estates, and even cash. So bonds may provide steady income, but high dividend yield stock offers higher potential returns, which can improve overall portfolio returns without adding excessive risk. So in summary, high dividend yield stocks play an important role in a balanced investment strategy by offering income, stability, and even growth potential. So they help mitigate risk associated with more volatile investments and provides consistent returns that provides, that contributes to a well-rounded long-term portfolio strategy. So don't just go for dividend yielding stock, but stocks with what? With high dividend yield, not just normal or regular on dividend, but rather higher than normal dividend yield. It will go a long way in giving you income stability and as well as achieving a long-term compound growth in your portfolio.